the PDAC 2020 and have another great guest with me, Adrian Day of Adrian Day Asset Management. Adrian, thanks for being on the segment as always.
Well, thank you for having me.
Yes, absolutely. So, a lot of craziness in the last few weeks here, or last like 3-4 days.
Yes.
So, I mean, we'll get to more detail on that, but I wanted to just take a step back and just talk to you more on the valuation side of the mining sector, right? I mean, you've been covering this sector for a long time,
Right.
and I want to go back of shareholder value. A few years ago, on the pre-recession, where it was all about production ounces, this and that, it's now gone to the point where it seems like a lot of these companies have tried their best to create shareholder value, and that means, we'll see, but these last quarter results weren't really that great. I mean, the all-in sustaining costs were, in line. Production numbers were kind of in line or flat, but the balance sheets were much, much stronger. That's for sure. Increasing cash positions, decreasing their credit facilities, things like that. But, in my opinion, there wasn't anything that really spoke out to me, except for some of the impairment charges they had on the balance sheet there. So, what are your thoughts on this?
Well,
given the gold price?
Yeah, I basically agree with everything you've said. I think there has been a change. The idea of just growth for growth's sake has gone out the window for the time being. Things will always change when the gold price is much higher.
Right. Yeah.
But for now, growth for growth's sake has gone out the window, and we're not seeing really crazy marginal deposits being acquired or being developed. We're not seeing that yet.
Right.
And there is an emphasis on balance sheet, as you said, which is very, very strong, which is very positive.
Right.
So we have an emphasis on the balance sheet. But at the same time, given the gold price in the last quarter compared with the gold price a year ago, the results weren't sort of spectacular by and large. And I did something interesting, not this show, but the last show I went to a few weeks ago. For the 2 days before the show, I just looked at all of the headlines. That's all I did, look at the headlines. And like 8 out of 10 of them were negative.
Oh, wow.
Now,
okay.
You can always find something negative. Pick up Agnico, for example.
Mm-hmm.
Agnico got slammed because of their production miss.
Right.
But when you really digged into it, most things in that report were pretty positive.
Yep.
And their 3-year guidance after 2020, their 3-year guidance stayed the same. Mm-hmm. There was really no reason for the stock to be slammed that way.
Right, yeah.
But nonetheless, I think there's been a shift, and a positive shift, but not perhaps necessarily, it's not all hunky-dory yet.
Right. I guess the best way to sum it up is mixed.
Yeah.
You would think that with the gold price where it's trading, except for the last 3 days, but before that when it was trading at 1680 range or something, and silver at around 1850, 1860, you would have expected a little bit more over the last several quarters, especially when gold and silver.
Well, especially since you didn't have an increase in the oil price, or a huge increase.
That's a good point.
Which is a big cost input.
Correct.
And the commodity currencies, the Canadian dollar, the Australian dollar, Brazil, these were all very low.
Exactly.
And
stable.
Typically, when you have a rise in the price of gold, you also get an increase in the price of the commodity currencies, mm-hmm. and so the cost of labor and everything else goes up along with the price of gold. So you didn't have that in the last 12 months. So really, the results should have been better. The earnings should have been better.
Do you expect maybe those earnings would change in the next 2-3 quarters here?
Well, if we carry on, if the gold price stays where it is or goes higher, and oil and commodity currencies don't move up, I think we'll see better results.
How would you characterize a lot of the M&A activity in 2019 and the divestment of a lot of the non-core assets from thereafter the M&A activity, even before with their standalone companies? What do you characterize that as? There's a lot in a very short period of time.
There's a lot, but it's really mixed. You have the big mega mergers like Newmont and Goldcorp, Newmont and Goldcorp and Barrick and Randgold. At Barrick and Randgold, there was some sort of synergy. Mm-hmm. Each side got something.
Right.
Barrick, frankly, got a good CEO finally.
Oh, absolutely. Yeah.
So they got something. It was worth buying Randgold just to get Mark Bristow.
Right. Yeah.
But when you look at Newmont and Goldcorp, frankly, where were the synergies? We talked about this last year, so we won't go on about it. It's old news. So I think it was really mixed. then you have, I think there's actually been there's been less M&A activity because a lot of companies are waiting to see what Barrick and Newmont, what assets they dispose of. Because when Barrick decides to get rid of one of its assets, that's a sort of one-off. It's going to happen, and it's done. And if you've got your eye on, some Chilean project or some Quebec project, it'll probably be there a year from now. So I think a lot of companies are holding off buying, mid-tier companies are holding off buying to see what comes, if anything else comes out of Newmont and Barrick. But the interesting thing is it's the Australians that have been the most active, isn't it?
Oh, absolutely. Yeah.
And they've got, high-priced paper. So, and they've been making good profits because the Australian dollar is so low. So the gold price in Australian dollar terms is an all-time high.
Yeah.
So they've been making very good profits and can afford to make these acquisitions, which some of the North Americans, frankly, aren't in a strong enough position to do yet.
Yeah, and going back to the balance sheets, the strength of the balance sheets of these majors and the mid tiers. One thing that I found interesting is the reinstitution of dividends.
Yeah.
And one thing I guess I found more interesting was, in a very short period of time again, was instituting the dividend and also increasing dividend by a very, very large percentage, between 25 to 50%. My question to you is, with this global economy, with all the uncertainty, the coronavirus, global output, is still going to be under pressure. Is it sustainable to have those dividends still pay out?
Yeah, I think it's a huge mistake. The mining industry is a capital-intensive industry. Mining is a depleting asset by its nature, and there's a constant need for capital. So why give, a quarter, a tenth, a fifth, or whatever it is of your profits in dividends, and then have to turn around 3 months later and raise that money in the market for capital development? So I think for mining companies, increasing their dividends just because you had an increase in the price of gold is a mistake. Yeah. And we saw in 2013, 14, we saw a lot of companies that had introduced dividend policies have to cancel their dividends or cut their dividends.
That's right.
Yamana is a good example. Newmont had this great thing of linking the price of dividends to the price of gold, and they had to abandon it. Now they've hiked their dividend again. I think it's a big mistake. The only companies, in my view, in the mining industry who should be paying dividends are the royalty companies, where you have sustained cash flow.
Right.
So if you have sustained cash flow and less of a need to keep raising capital, you can justify paying some of it out to
it's a low cap business model.
Yeah, and let's face it, most of the dividends were 0.75% to 1.5%.
Yeah.
That's the same as the S&P.
Yeah.
It's not like as an industry, we're lagging the broad market. So I don't think it was necessary.
So then why do it then?
Nobody buys Newmont because they're paying you 1.2 instead of 1.
Yeah.
Nobody. So it's a waste of it's.
So then why do it now? Why are other majors instituting these dividends now?
I think there's definitely a sense that they need to give something back to investors who have, up until the last year, have really suffered.
Yeah.
Significantly. And I think also, frankly, there's a follow my leader. Somebody does it, so somebody else at a board meeting says, hey, did you hear that XYZ has raised their dividend? We should do the same thing. We don't want to be left behind.
Right.
And if they can do it, we need to show we can do it as well.
Interesting.
I think there's a lot of that.
So a little bit of politics there.
Yeah, I think so.
Okay. So how about the depletion of the mines and replacement of the mines in terms of resources and reserves? What's your thoughts on, because there has been discoveries, but has there been enough to replace those the reserves? What are your thoughts on that of the last year, this year?
We're definitely discovering fewer new ounces than we're mining as an industry. So, something has to change in the next few years, obviously, or because we're on the wrong trajectory there.
Right.
And you saw at the end of last year, despite a higher gold price, you saw a lot of companies mark down their reserves, interestingly.
Right, actually that's a very good point you make, yes.
Now, some of it, the most obvious case was Newmont, which mark down a lot of Goldcorp reserves, which
Right.
was an easy thing to do.
Right, right,
Say,
right.
oh, well, they didn't do it properly, we're going to do it properly.
Yeah.
But nonetheless, it's surprising, but with an increase in the price of gold, you didn't get a big increase in reported reserves.
Right.
I think one of the things that as investors we need to understand is that, not always of course, but often, a mine that is a bad mine and doesn't make sense at $1,400 may well still be a bad mine and not make sense at $1,800.
Right. Yeah.
There are some mines, of course, which just need a higher price to be economic.
Yeah.
But there's other mines where you have metallurgical problems, where you have this kind of problem or that kind of problem. And, you know, a 20%, 25% increase in the price of gold isn't going to cure all your problems. And so, no, I think it's a real problem. We're just not finding sufficient large deposits.
Yeah, and the thing is, you're not even seeing, from what I saw, I mean, obviously because the mid-tiers and majors have other things on their mind, but you're not seeing that reinvestment of capital into these, into the pipeline of new projects.
Very little.
It's more brownfields. Well, the good thing is, though, the positive thing is in the last 2 years, you are seeing a lot of juniors who are able to finance and finance the projects to kind of prove up their resources or find new discoveries, but those windows open for such a short period of time and then they close again.
Well, that's right.
And then by the next time they raise money, depending what the project is, it's more difficult or it's not.
No, that's right. Well, the seniors, for the last several years now, have really treated the junior mining industry as their exploration departments. Very few of the seniors are actually doing any greenfields exploration, as you know.
Yeah.
A lot of brownfields, and brownfields is essential because, you know, often the best place to find gold is where you already have it.
Yeah, of course. Yeah.
But we still need the greenfields exploration that we're not getting. And we go backwards and forwards as an industry on whether we go to more adventurous jurisdictions or whether we come back and stick with Canada and North America. I mean, even Mexico's not as secure as it was. And I think we just go backwards and forwards on that, depending on what happens. You know, you have the Argentine election and you have the Mexican election, and suddenly everybody says, well, we need to be safe.
Yeah.
You know, a few years' time, that'll change. We'll all be going to Sudan and Eritrea again until something happens.
Yeah. What's your thoughts on the global economy as a whole, I guess? You know, and then you can kind of take that comment or take your answer where you can comment on the coronavirus as well in terms of how that's going to impact the markets, but more so to the mining sector. So what's your outlook?
Well, you know, I'm not a medical person, let alone a virus expert, so, you know, I'm not really qualified to talk about what's going to happen to corona. But clearly that is a major factor that could determine which way the global economy goes. I mean, clearly we've had a big slowdown in trade recently. First we had the China trade issue with the trade issue with China. Now we've got corona. And if we don't have global trade, we can't have a strong global economy, obviously.
Of course.
So you look at manufacturing in Europe, that's fallen off a cliff, not just on Friday, but, you know, for the last 6 months, that's gone down sharply. Germany, the best economy in Europe, teetering on the edge of a recession for the last 9 months. So generally speaking, you know, around the world, things have not been very good, and the US, North America has been the relatively strongest, the strongest. But, you know, the corona could make things deteriorate much more rapidly. But, you know, one thing, if I may, to say about corona and in the markets, you know, we shouldn't forget that the markets, the broad markets, were already overvalued. You know, and there was a lot of, I don't think the market overall was a bubble.
Like the U.S. markets only?
Yeah,
or
the U.S.
just,
and global, frankly. But there were certainly bubble areas, you know, the social media companies, the unicorn companies, you know, companies that don't have any prospect of profits anytime soon. There was a wonderful interview in the Financial Times. I forget actually the CEO, but this was some guy bringing his unicorn company public. And he was asked about, the question was something about profits. And he said, well, profits don't actually feature in our corporate mission. So, oh, really? So the point I'm making is that things were already already overvalued, and Peter Schiff has a wonderful phrase. He said it's not the size of the pin that matters, it's the size of a bubble. So anything, it happened to be Corona, but it could have been something else that pricked it, frankly.
So what do the governments do? Can they do anything? Will we see more QE coming? Will we see them, we were talking this off camera as well, but what were your summary thoughts
what
there?
they should do and what they will do are probably two totally different things.
What will they do?
What
then?
will they do? They clearly are going to, let's step back a second. Central banks have two main tools. One is they lower interest rates, one is they print money. Over the last several years, interest rates have got to almost as low as they possibly can go. You can go to -1/4, you can go to -1/2, but there's a point when you can't go any lower.
Of course.
And the central banks already recognize that in terms of the economy, not in terms of the market, but in terms of the economy, lowering interest rates from here really doesn't have any impact. This is a huge subject we could talk about, but it's really not a surprise for when governments have consistently and repeatedly lowered interest rates since 2009, and you just keep on lowering interest rates, it's not a surprise that it doesn't have a stimulative impact. But the other thing they can do is increase the size of the balance sheets. But that has unintended consequences. There's a direct line from the QE that the Fed introduced to the rise of populism and the widening wealth gap.
Right.
Because money is only going to people who already have money. And so the next stage of this, if you like, is MMT, modern monetary theory. The next stage is where governments start spending money unfunded, no increase in taxes, no increase in debt necessarily. They just spend the money, and the central banks print the money
to replace whatever is
to support the spending.
Yeah.
And that is the sort of next stage, if you like.
Interesting. So, are you a bull or a bear for the precious metal sector in 2020?
Well, I'm definitely a bull for gold.
Okay.
Yeah.
Okay.
I mean, I think definitely. Some of the other resources are going to struggle a bit.
Okay, and how about the metal sector overall? Like we were talking about the gold itself, the price, or or are you talking about the actual equities? What are your thoughts there?
I think unless the corona sort of unless this develops in the next several months to something really, far worse than it is at the moment.
Yeah.
No, I think the gold stocks will come back. I mean, the prices right now are ridiculous.
Oh, the 20-30% discounts right now.
Yeah.
I mean, given that we'll see what happens on Monday, but hopefully it doesn't get the bloodbath doesn't continue. Oh
no, prices are super cheap right now.
Interesting. Okay, well, thanks a lot, Adrian, for being on the segment again. I really appreciate it. If you want to find out more about Adrian, you go to adriandayassetmanagement.com, and I'll put a link in the description below. You can find out more about his services as well, and you can also see his. I think you have like a monthly kind of commentary or something.
It's quarterly.
Yeah, quarterly commentary. So you can see the quarterly commentary and follow Adrian. Okay, so thanks, Adrian. Appreciate it.
Thank you very much.
Cheers.
Thank you.